I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a real treat. People have been asking for this man to come on for months. I've been trying for months. He's very busy, flies around the world. He gets calls from all over the world for his financial expertise. He's an economist. He is a former hedge fund manager. He is world renowned. He is a financial expert, bona fide. I'm talking about Martin Armstrong of Armstrong Economics. Martin Armstrong, thanks for joining us today on USAWatchdog.com.
Oh, it's always a pleasure to be here.
Well, you said in the pre-interview, hopefully I can disclose this, you're getting calls from Washington every week, maybe a couple of times a week now. And I just saw that Donald Trump wants the dollar lower. What are you consulting people in Washington about lowering the dollar? Are you consulting people in Washington about gold, the stocks? What's going on?
No, I mean, I get calls all the time. I'm not consulting them that they should be lowering the dollar. No. I'm telling them that they can't do anything about it. I mean, that's what's been going on for so long. I mean, that's what the Plaza Accord was about. That's when the dollar went up in 1985 and the pound went to par. So what you have back then was the same thing. And the birth of the euro was all caused by this. These people in Washington think that they can help trade by simply lowering the value of the currency. And it's kind of like, cheating on an exam in school. I mean, it's just, you're not really addressing the issue. I believe we're going to end up with some major monetary reform going forward effectively because, they've been playing this game with currencies for decades now and they always lose.
What kind of reform do you envision happening? Do you think the dollar will lose its reserve currency status? Do you think something else will take its place?
Well, you have to understand that I've been warning about that for quite some time. That's why I get a lot of calls now. And there are people in Washington that are recognizing that the problem is the fact that the dollar is the reserve currency. So what does that really mean? It means that essentially that you have to be concerned about international policy objectives and you're domestic. So you're not totally free just to do whatever you want domestically. If, then you have the IMF and everybody else pleading, oh, please don't raise your interest rates, you'll affect us. So the Federal Reserve has also become almost really the central bank for the world. And, that's way beyond its ideas or what it wants to do. And that's why you have Yellen coming out constantly choreographing and saying, listen, we're going to be raising rates. This is her domestic policy objectives, and she can't keep them hostage to international all the time. So it's a real mess. And I believe that we're out of all this chaos that we're going to see over the next few years, they're going to have to come up with some sort of a basket of currencies, and that will become the reserve.
Is that what, like Jim Rickard says, that the SDR will be the reserve currency? They're going to roll that out, the SDR, or nobody might not trust the SDR and trust a basket of currencies that will have a gold as some type of a backing for a world reserve currency. What do you say about that? SDR or gold or both?
No, neither. And I would be against both, actually, because the problem is that why did Bretton Woods fall? Okay, gold standard, etc. But you fixed the value of gold, but you didn't fix the quantity of money. And it's such a system cannot be sustained. The SDR, I was looking at that, and you can see on our site, I even initially proposed that back in 1985. And we went all through that. And honestly, then you're surrendering your sovereignty to a large degree to the IMF. And the IMF is just way too corrupt of an organization. So, I don't see that either. I mean, I think simply a basket of currencies is what I would argue for. And then everybody's individual currency simply floats against that. It's more or less a two-tier monetary system. I mean, many times this has been used throughout history. South Africa in the 1980s had the financial rand and then the rand. So if you wanted to domestic, you used the rand, and then if you wanted to transfer money in and out of the country, that would have to go through a second currency, which was the financial rand. So, you have to do this thing. I mean, I advised Switzerland that's what they needed to do. And, they basically went and pegged the Swiss franc to the euro. I met with them. I mean, probably, I think it was just a few months up to about a year before it broke. And I told them, I said, this is going to completely collapse. I mean, that's why FX Street named me, I don't know, forecaster of the year or something. But, I didn't think it was really quite warranted, because I simply said to them, I said, listen, it's going to break. They said to me, oh, no, we think we can do this. And I said, look, the odds are on my side. Not one country has ever succeeded in this. So I think, I'm just, playing the odds here. It's not going to work. And then after it cracks, then they call me on the phone. Oh, gee, could you please come back? I said, yeah, okay, fine.
So you think we might end up with an international trade dollar and a domestic dollar? That's what you think we may end up with?
Yes. You have to have something. All it's doing is replacing the dollar itself as the reserve currency, which would satisfy China and Russia. And it just simply would be maintained by an international board, and I strongly advise against the IMF. Way, way too corrupt. And I mean, I've written before. I mean, I went to the Republic Bank and rented the entire National Gallery in Washington to put on an IMF dinner for them. I was invited down to show me how they had the IMF in their back pocket. And they were trying to get me to invest in Russia with them. And I said, listen, my model says Russia's going to collapse. I mean, they all blamed me afterwards. And they said, oh, we got the IMF. I said, fine, that's very nice. But I talked to the countries that have to support the IMF. So it's just too corrupt of an organization. And you can't replace that with just simply removing the head and sticking somebody else in, because corruption it's like a cancer. It goes all the way down. So, I mean, Trump's finding that out in Washington. You can appoint these people to be heads of various different agencies or whatever, but the bureaucracy underneath, which doesn't change, they don't have to listen. I mean, you get a lot of these conspiracy people who are, saying that, oh, gee, just because like Bush was the head of the CIA, he knows everything. Do you really think that a president can put somebody in who's just going to be a political appointee, he might be there for 2 years, that they walk in the office and say, oh, yes, let me confess, we killed this guy, that guy, and everything in the world? No, it doesn't happen that way. They say, gee, would you like a golf meeting? I mean, I'll get your clubs all polished up for you. That's what they want. They want to get them out of the office.
So let's go back to the dollar here really quick. Would gold be a good thing to have? You have been positive on gold in the past, and you've been not so positive on gold in the past. I know you've gotten a lot of grief on both sides of the aisle on this. So if we do have a domestic dollar and a trade dollar, I don't know if that's what you would call it, but let's just for our terms call it that. Would gold be a good thing to have for people in America?
Well, gold is a hedge against government, all right, but the problem is you cannot fix a currency. What is really wealth? The wealth of any country is exactly what Adam Smith said. But, I'll just articulate it a little bit different. It is basically the total productive capacity of a country. It's all its people. And that's why you can go to other countries. They have, a greater population, but are they educated? Are they innovative? I mean, this is what communism basically was attacking. It was attacking humanity. And I've been to both, Russia and to China. They were both communistic states, but different. Stalin was paranoid, all right? He basically was executing people if he thought they were smart enough and might pose a threat. He worried about what you thought. China had what you call the tall poppy syndrome over there. And that was, the poppy that grows taller than everything else gets its head cut off. As long as you basically just kept your mouth shut publicly, they didn't care. All right. So the difference is when China went into capitalism and Russia, you got completely different effects. Russia was like they had really drained every drop of humanity out of people. I had a friend who bought and set up a factory in East Germany, and he says, "Oh, the Germans are going to work really as hard." After I said, "I'm telling you, it's not going to work." And afterwards, within 2 years, he said to me, "No, you're right." It takes 3 East Germans to do the work of 1 West German. I said, you can't get over these things that what Stalin and that variety of communism did. Whereas in China, they didn't attack humanity. So as soon as they were free, man, they just, exploded. I've said before, I was invited with the 97 currency crisis. I was the first people invited from the West to Beijing. So I went there. They gave me, worked with the central bank. And then they took me to a facility and they gave me a tour. And I was really amazed. But they were monitoring absolutely everything in the country. There were 249 varieties of tea, which were mind-boggling to me. I didn't know there were that many. And they were monitoring the prices of everything. So I had to sit in meetings, and they were asking me, why is this one tea different in price here versus there? And I said, okay, fine. Where is it manufactured? And they said, over here. I said, well, first of all, you're going to have transportation costs. Secondly, humans always want something has a little bit more value to it if it comes imported from someplace else. So you go to Sydney and they say, New Orleans Steakhouse. You go to New Orleans, they say New York Steakhouse. Okay, so somehow it's always better if it's from someplace else. And I was impressed that they were monitoring everything, but they were not interfering. Whereas in Russia, what happened? Russia went from communism basically just to an oligarchy. The guys that were really there just took the industry, and that was it. You never really had a full, really capitalistic type system over there. It just went from, complete suppression to an oligarchy, and it very, very interesting. But you have completely different results.
And what about the results over here? And I want to just get back to this gold question because a lot of people want to hear your opinion on gold. Would you be an owner of gold with what's going on with the dollar and then wanting to devalue it or break it up into 2 separate currencies? Would you be an owner of gold? Would you advise people to have gold or silver in their portfolio? I don't mean bet the farm, you just have some.
Yes, I mean that's at that point you're talking about a hedge against government. All right, when you go through these monetary crises, effectively all tangible assets rise, not just gold and silver. I mean, if you look at Germany and the hyperinflation, the currency they replaced it with was backed by real estate. So yeah, that's basically it. It's just that whatever it used to be, and you can even look at this in Europe when they converted from their local currencies to the euro. So a cup of coffee that used to be like 10 krona or something suddenly becomes like 10 euros in a lot of places. So they translate various values, whatever it was under that currency, to whatever the new one is. So they always make that transition. And everything has an international real value to it, which is why you see foreign capital coming in and buying up real estate locally, things of this nature. Because everybody judges things according to their own currency. Currency is it's a mental state. It's a way we value things. All right. Even gold. All right. You say, gee, okay, fine. What's gold going to go to? If I say 1,000 or if I say 10,000, whatever. What am I doing? I'm translating it into the dollar. That dollar is your way of measuring value. It's not gold, it's the dollar. So in every country, if it's British pounds, you can say, okay, fine. They're going to look at it in their local currency. A European's going to look at what is gold in euro. You can have I think the biggest problem with a lot of the people in gold, they only look at it in dollars. And they say, gee, why isn't everybody buying this or whatever? And then you chart it in their currency and you'll see it's going down. So it all depends. I mean, we live in a very fluid, environment. So gold, as far as backing a currency is concerned, that's not the issue. It's been tried so many times and it has always failed. Why? What's the common denominator? It's politicians. All right. Marx failed there. Why? He said, we'll take all the ownership away from private people and hand it to the government. Okay. Why did communism fail? Because it's humanity. Once you put those same people in charge, they became greedy, the same as if it was a CEO. All right. That's human nature. So you're not going to flush that down the toilet, so to speak.
But private individual holders of gold would be a good hedge against whatever they do to the currency. You'll have a hedge to transfer to new value, whatever it's priced in. Would you agree on that?
Basically, gold is a movable asset. So there's two primary categories: movable and non-movable. And the non-movable is like real estate. All right. If there is no situation of a war or things of this nature, then real estate can hold on. But if you have all your money in real estate in Germany and there's World War II coming, you got nothing. You got to walk away from it. So one is movable, one's not. And so all the various different things, rose, stamps, coins, during the 1960s and 70s, all the rare stamps and coins from Europe were here in America. Why? Because when World War II happened, they just picked up everything and brought it over here. That was movable. So for years, then it kept moving back slowly towards Europe. Now you see, you take like ancient coins, for example. The two biggest buyers in ancient coins today are Chinese and Russians. So it's tangible assets have a value to everybody globally. The downside is on the real estate. I would never put 100% of my money in real estate because it's not movable. All right, you don't know what's going to happen, whatever. And I just published an article on the blog about what's going on in New Brunswick in Canada. The government, all these governments are broke. And the difference between a municipal government and federal is that the municipal governments and state governments cannot create money. The feds can. The feds can just go ahead and print money to cover their expenditures. Locally, they cannot. So what do? They just keep raising taxes crazy. I've also put on the blog and showing that the two states that everybody's migrating to are basically Texas and Florida. I moved myself. And honestly, my lawyer told me that in New Jersey, he said, listen, if you die, have your kids drag your body across the river before anybody knows about it because of the inheritance taxes up there. And my lawyer and my accountant made me sign in blood that I'd be out of New Jersey before the end of the year. So Um, I mean, even my sister's advisor is like telling her, you cannot retire here. So it's just getting, states, California is really bad. I mean, property taxes, I published an article on that. New Jersey now has the highest property tax in the country. The average home is paying $8,700 compared to, I think it was Georgia or Alabama was $776. So you have to be careful about the states, and what they're doing is they're going broke. So like up in Canada, they just came up with a program. I just published that woman in a very small home. They just suddenly cleaned out her bank account. They arbitrarily said that she did $76,000 worth of improvements on a house that was like about 1,000 square feet. She didn't do anything. They just arbitrarily said you did, and they just went across people's anything that they, maybe the last time they looked at a house, maybe 30 years ago, oh, this is different, so they raised all the taxes. And I mean, this is, and what I wrote about, I mean, this is how Rome fell. Rome was the biggest city in ancient times, first one to reach 1 million population in around 180 AD. It fell to 15,000. Why? Because politicians kept raising taxes, property taxes. It got to the point you couldn't pay, you just had to walk away.
And you think that the USA, at least parts of the USA, are turning into Rome?
Oh, yeah. I mean, it's this what I just said, that the state and local governments, they cannot basically print money. All they can do is raise taxes. So the higher you raise the tax, not only you're seeing a very strong migration out of the highest tax states, but you basically you lower the GDP. I mean, this is why we're looking at economic growth. Like, if it's 2%, everybody's jumping for joy. It's not going to come back. I mean, we're not going to see this great economic growth. And you take, Trump on all this money, that's overseas that he would like to see home. All right, he's absolutely correct. eBay wanted to buy a company and take over a company, but when they looked at the taxes that they had to pay to bring cash back from overseas, the takeover fell apart. So, it's very nice. The Democrats say, oh, we're going to tax the rich, or we're going to make them pay, 40%. All right, well, they can just keep their money overseas. Trump's correct in saying, okay, fine, if I give you a one-shot deal, 10%, you bring it all home. I would basically sell short any company that didn't, because you don't know if you're going to get that opportunity again. You just take it, while it's there. But we have so much money that is just not being used in the economy. You take, all right, all the gold guys that were saying, about the quantitative easing and how it was going to be, hyperinflation, all this. They don't know what they're talking about. Just look at it. I've written about it many times. The bank said, oh, gee, you're buying back our bonds. Okay, well, we need a place to put money. Okay, so the Fed created excess reserves. Honestly, a 2-year-old can figure this is not going to work. All right, how are you going to put money into the system, and then the banks are complaining they have no place to put money because they're not going to lend? Oh, okay, fine. We'll create an excess reserves. You can put it right back with us. There's almost $3 trillion in excess reserves doing nothing. Never went into the economy. Never stimulated anything. And what have the banks gotten out of it is, you look at the spreads between what they pay you for a deposit and what they charge. It's outrageous. I mean, you'd be lucky you get 0.2% for a CD, and then you want a car loan, and it'd be like 3 to 4%. That's a huge spread.
And do you think that the economy or the stock market is going to crash? The bond market, any of those things? I mean, right now, long rates on the 10-year are going down. The fear trade, people are running into the 10-year Treasury. Do you think there's any kind of a risk of a crash in the stock market or a crash in the bond market? What are your views on that?
Bond market, yes. I mean, all these things occur as contagions.
Why the bond market? Why would you think it would crash?
Largely because what happens is that even in the Great Depression, not every municipal government defaulted. Many of them did, like city of Detroit defaulted. They eventually made good. They defaulted in 1937, and yes, they finally paid off their bonds in 1963. So if you're counting on that for retirement, good luck. But what happens is that once you begin to see one municipal government start to go down, traders act in response. Who's next? Greece. When Greece started going down in 2010, what did they do? They started looking around. Oh, they're all really in the same position. Oh, who's next? Oh, Portugal. Then they went after them. Then it's Spain. Then it was Italy. All right. Then they were looking at France. This is how they move. Okay. It's a contagion. So once you draw blood on one market, you look around. Okay, where can I do the same trade elsewhere? So the problem with bonds is that the U.S. is not going to default. But as you start defaults elsewhere outside the country, it makes people begin to get concerned about sovereign debt. Because sovereign debt is the worst of all. It's not secured. So if U.S. government went bust on its debt, what would happen? I mean, you can't go down to the National Gallery and start lifting Picassos, So whereas if IBM went down or General Motors or whatever, it goes into bankruptcy and you get, they sell off assets and you get something back. You get nothing back from government debt. So it's, and governments are always very, very dodgy. I mean, because they make the laws, they do their own prosecution, and nobody can prosecute them. Italy, when it was in trouble, what did it do? You bought 90-day paper, and then suddenly they couldn't pay. So what did they do? They converted the paper to 10 years. Arbitrarily, that's it. Oh, okay, that 90-day bond you bought, now you're not getting the money back. We're not defaulting, we're just converting it to a 10-year bond.
And do you think that the U.S. would? I have this theory about Donald Trump, and if push comes to shove, he's not going to do the full faith and credit of the U.S. Treasury bonds. He's going to do some sort of a default. That's what I think, because based on his past record, what he did with the banks in the '90s. Do you think that Donald Trump, if push comes to shove, that he will push the default button? He'll just default on the national debt?
No, it's. Okay. Much different. I posted an article on that too. I went through it and I analyzed. I mean, the bulk of the debt is really held by the government, and it's in pension funds, Social Security, etc. So you're looking at if you default, you're not defaulting on some third party over in Bangladesh. You're basically causing a tremendous problem in the social level domestically. But this goes back to the problem of the dollar being the reserve currency. All right, about a third of the debt is held by central banks as their reserves. So if the dollar is no longer the reserve currency, then they no longer need to hold U.S. dollar government bonds. So these are some of the changes that are coming.
Well, that would be like Armageddon. If they had to sell their portfolio of bonds, wouldn't that be a bond crash, Mr. Armstrong?
Yeah, but, honestly, the U.S. is the strongest economy in the world. We're the ones holding everything up. That's it. U.S. is not the problem, and by any long shot. And people are going, $20 trillion debt. Okay, fine, but world debt is at $150 trillion. So you're looking at something substantially different. And the real risk is more coming from Europe and from Asia. I mean, that's really the real risk. You take the euro. What? All right, I was involved. They came to me when they were creating the euro. Back then too. I warned them, this is going to crash. You can't do it this way. And I told them they had to consolidate all the debts. Then that would have created a federal debt. All right, the whole idea of the euro came out of the Plaza Accord. That was